I think this is one you want to hear, Don. She says,
Right.
I'm ready. Just closed last month. And I think she was responding to one of those messages earlier where you're saying, if you're ready, say I'm ready. So she says, I'm ready, just closed last month. So she's got $383,000 in the loan.
Okay.
That's the original loan.
Mm-hmm.
And she put 5% down. And then she says that her interest rate is 3.5. 3.5.
Okay. All right. So here's where we're going. We've got a principal and interest payment of $1,719.84. That does not include taxes and insurance. Taxes and insurance is on top of that. Okay. Which, if you add it to your mortgage, it's the escrow. Okay. That's what's escrowed.
That's
So
right.
here's what we're talking about, folks. Before we get into this example, there is a term that we want to talk about today. It's called escrow. And a lot of banks or mortgage companies offer this as a free service. They will take your taxes and insurance payments, divide them by 12, and add that number to your principal and interest. Okay? Your PI,
Mm.
and then if you add it, it's the TI, taxes and insurance, PITI, principal and interest, taxes and insurance. All right? So here's what's happening. Although it's offered as a service, a free service, did you realize for every dollar deposited in your bank, the bank can lend out $7 or $8 for every dollar on deposit? It's called fractional reserve lending. So if I can get you to give me money to put in a savings account for you that pays you absolutely no interest. So here's what's happening. As a free service, they're offering you a bank account. You can deposit your money for taxes and insurance. You put it in there, and they will pay the taxes and insurance for you. You're putting it in a savings account. They're paying you no money on that savings account. And then they'll pay your taxes and insurance. But for every dollar there is deposited in their bank, they can lend out $7 or $8 based on your escrow money. Did you realize that on most mortgages, you can opt out of escrow and pay your own taxes and insurance? Put it in your own account where you can actually make interest? You don't have to do it this way. It is required on some mortgages, it's not required on others. Check into it and see if you can opt out of escrow, and I'll show you how you can use that money to save interest instead of putting in a bank paying you no interest. How would you like that, ladies and gentlemen? Come on. All right. So moving on. So we have 383,000, 3.5%. Here's what the bank wants on that loan: $236,142.40 in interest on a $383,000 loan. Folks, that's 61.656% of the total interest paid as a percentage of principal is 61%, not 3.5%. So what we're looking at here is 236,000. Let me give you just an idea of what we do for most clients. For most clients, this loan will be paid off in 7 to 9 years. Not just this mortgage, though. We can pay off the mortgage, both car loans, student loans if they have them, and other loans, like the loans you get for your fence and the loans you get for furniture and all of that stuff. We can add all of those loans in, and everything can be paid off in an average of 7 to 9 years, because the interest that the bank wants, $236,000, let's say we can reduce that down to about 78,000 instead. These are just averages. What if we could get that thing down to under $80,000 in interest paid to acquire the same asset? Here's what the bank wants you to pay to acquire this asset: $618,000. That's what they want you to pay, a total $619,142.40. You're doing this in a $383,000 neighborhood. but they want you to pay $619,000 for it if you add the principal and the interest together. So instead of paying $619,000, what if we could pay to acquire the same asset $383,000? What if we could pay a total of $461,000 instead of $619,000? Wow, wow, wow. What an interest savings to acquire the same asset. What could you do with the savings of over 150, 60, $75,000? What could you do with that money if you didn't have to give it to the bank? So, Rachel, I hope this gives you some idea of what can be done. Thank you very much for allowing us to look at this mortgage that you set up here. And folks, anybody can do this. We are looking at how you can save money today, not give it to the bank, and that extra interest that most people are paying can now be invested into your family. And we're going to show you how most families can take these savings and turn it into $1 million over the next 20 years or more. Have mercy.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.